or welcome to Sectors Made Simple. Our goal here is to always teach people and teach you how we can invest in the stock market simpler. But a big part of that isn't just the ability to do all these crazy trading strategies and finding ways of making advanced trading simpler. It's also meant to be making the easy, simple stuff simpler. So, to try and accomplish that goal in a much clearer and more straightforward format, I put together this webinar for us all. Today, I'm going to show you 5 different ways to use sectors made simple. Each of these ways will show you how we can learn and use the information that we offer to make trading decisions. Not as the beginning of your analysis. The goal here is that you can start, analyze, and come to an investment decision all within 5 minutes or less. So let's dive right in. But before we do, gotta do the boring stuff. Quick disclaimer that everything I'm sharing today is meant as an educational resource. My goal in showing you how to do all these strategies is so that you can make your own investment decisions without needing someone else to tell you what you should invest in without knowing why. I'll cover the what, I'll cover the how, and the why to give you all the knowledge you need to make informed investment decisions. But please remember, past results cannot guarantee future performance. That's why it is important that we learn what is going on, because every day is a new day in the market. I want to show you how these strategies is going to take less than 5 minutes to use, which means that you can open up the dashboard and come to a decision of what you might want to invest in less than 5 minutes. Each one of these strategies is a full strategy with actionable results. Meaning, again, there's no, this is the start, and then you need to go and analyze the charts of 10 different companies. The end decision that we can come to will always be and this is the company or this is the thing that we could invest in. So let's take a look at what these 5 strategies are, the steps that we can use the steps that we can follow to use these strategies ourselves, and I'll give you a couple of reasons why we might want to use this strategy in the first place. So let's dive right in, of course, including an example of putting it into action. We're going to look now at matrix strategies. I know, big surprise. Matrix strategies are a way of talking about using sectors made simple to invest in its simplest form. It is the go-to for myself and many other sectors made simple subscribers as a way of investing in the stock market using the idea of market sectors. Every single strategy trades one thing once per week. That's it. While we can just follow one strategy, the beauty of these strategies is that we have created multiple strategies that we can choose from. And the hope and the goal is that we can always find one strategy that is outperforming the market and is providing us with the best results possible. So we can follow the steps that each strategy uses. And to me, that's one of the most interesting things. Do I expect every person to go through and follow them step by step? No. But to me, it means a lot to be able to create and share strategies that it's not some magic black box that you throw an idea into and it gives you an answer. Why? The strategy told me to buy this. These strategies not only provide you with honest, clear results of how well they've done, but it also shows you how it thinks as well. But if you're not one to want to have to do all of those steps, even though those steps can be done in 5 minutes or less, here's the thing. All of those strategies also in big, slightly bolded text tell you exactly what the strategy is investing in right now. So while you can always trust but verify the results for yourself, we also give you the straight up simple answer as well. So let's take a look at picking a matrix strategy and what we can actually see with one of these strategies. What you see above my head here is a matrix strategy as it appears on our dashboard. Each strategy will pick a sector in a slightly different way. And as a result, because they're not all thinking the same way, all of their returns or results will be different as well. Some of the main reasons that the strategies will be different is that they might change what day of the week they trade and also what numbers they look at. So for example, here we can see a Wednesday long-term strength strategy. Honestly, I should just find some nicknames for these things. Wednesday long-term strength strategy. No, you're Bob. Let's talk about Bob. Bob trades on Wednesdays, meaning it goes into the stock market on Wednesday and it sells what it was holding last week and buys whatever it's going to be holding this week. What it's holding this week is XLY. How does Bob think? What does Bob look at? Well, Bob looks at long-term strength. And as I said before, each strategy shows you what it's currently holding. Plus, we don't want to just say, trust us, this strategy works, or let you think that this strategy worked 2 years ago when we put these strategies up on the dashboard, and then since then, we hope it still works. No. All of these strategies provide you with their up-to-date returns over the past 3, 6, 12, and 36-month periods. Every time the strategy updates what it's holding, the strategy will also update what its returns have been. So for example, if your screen is pretty big, you can follow along. If not, it is there. Below where it's saying currently holding XLY, which by the way is the ticker symbol that the strategy is actually buying, it says holdings updated on Tuesday, October 28th, 2025 at 1:15 p.m. Today is Tuesday, October 28th, and currently Pacific time it is 4:11. Meaning this strategy updated 3 hours ago after the market closed on Tuesday. So I already have the information of what the Wednesday long-term strength strategy is going to be holding from tomorrow, Wednesday, until the following Wednesday. When I'm choosing which one of the strategies that I personally want to follow, usually I'm going to look at what strategies have the best 3-month returns and 6-month returns. Why? Because as great as it is to see the strategy's been profitable over the last 3 years, the market and the world has changed a lot in 3 years. And the market that we're investing in today is quite different than the market we were investing in years ago. So I want to make sure the strategy is still holding up today. And looking at both 3 and 6 months lets us get a little bit more consistency of what strategy we might be interested in. This is the trickiest part, but really it's not that tricky. Let me actually go with you and let's open up the dashboard and see for ourselves how we can find the top strategy and what the top strategy, in my personal opinion, is. So here we have the Sectors Made Simple dashboard, where we offer all of the tools that we have here. And on the left side of the menu, we have strategies. When you open up this page, it will order all of the strategies by 3-month return. We'll see Tuesday long-term strength has the highest return currently. Wednesday total has the second highest. Wednesday long-term has the third highest. I also want to check 6-month, where I now find Wednesday long-term is at the top. Tuesday long-term is in second. Wednesday total is in third. Ultimately, we can pick any of these 3 because if we've noticed, it's the same 3 for 3 and 6-month returns. Which one should you pick? Well, unfortunately, I can't really make that decision for you. What I can tell you, though, is that for the past few months, I've personally been using the Wednesday long-term strength strategy. Every time I do a webinar talking about the dashboard or matrix strategies, this one has always cropped up. And because it's something I follow every week, it's a strategy that continues to put its name out there as one of the leading strategies. So with that context, that's why I've chosen the Wednesday long-term strength strategy. But again, one of the beauties of these strategies is the honest results that they have had over the past periods. For example, we can see here, if I make this a wee bit bigger for all those playing along at home, return. What's its results been? How well has it done? Well, over the past 6 months, it's made a profit of 34%. Drawdown, fancy word for saying risk. What's the worst that it has done? Well, the worst it's done is 2%. So with this strategy, we risked 2% to gain 34%. Cool. But it's one thing to say that the strategy is profitable. But it's another thing to say, is the strategy beating the market? Because it's great that these strategies only need to be traded once per week, but if they're not beating the S&P 500, why? Why put in the extra work? So we tell you those results as well. Over the same period of time, SPY has had a return, or the S&P 500 has had a return of around 20%, with a loss of 1.2%. So not much more risk for quite a bit more return. And if we look at the past 3 months, our strategy is up 11.7% with a 1.3% risk versus the market's 5% gain with that 1.2% risk again. Every one of the strategies on the dashboard offers that information to you so that we are all making informed decisions about what strategy we're most interested in. But here's the best part. It's great that these strategies are here and that we can go in and see what they're holding. But here's the thing. I don't have that much time. If my goal is to find trading strategies to use in 5 minutes or less, I don't want to have to set a reminder on my phone, come in here, and remember to trade the strategy. You see that little bell icon on the right? You can get alerted when the strategy updates. So if I tick this box, when this strategy updates, which is, or for today rather, was at 1:19 Pacific time, 4:19 Eastern time, I would get an email. And that email would tell me the Wednesday long-term strength strategy has updated. It is currently holding XLY. You don't even need to open the dashboard. As long as you have your Sectors Made Simple subscription, we will send you an email when the strategy updates with what it is now holding. It is that simple. So again, while you have all of the honest results there, once you've chosen the right strategy, you can set an alert to be notified via email when the strategy is updating. The reasons, in my opinion, that we could pick a matrix strategy is that it's a very clear choice each week. There's no guesswork. There's no having to worry about, oh, is it doing such and such or that? No. You know how it thinks. You know what process and steps it's following to make a decision. And it tells you right up front, this is what I'm investing in. Plus, the strategies update every week. That means that once every week, you get told what it's updating to, and you don't have to worry much outside of that. Because we provide you with the up-to-date, honest results of how well the strategy has done. Not just is the strategy making money, but is the strategy beating the market as well? Again, if you are very much the skeptic, and I encourage you to be, you can verify the steps that the strategy follows to make its decisions using the investment steps within the strategy. Plus, all of the things that this strategy is trading are sector ETFs. Historically, sector ETFs are less volatile than individual stocks, which means this strategy can be a decent way of trying to diversify or reduce the risk in your portfolio without a whole bunch of extra work, while still getting to enjoy all of the ups and downs that comes with a normal market sector rotation. And then finally, these strategies can be used in a standard brokerage account, of course, but they can also be used in any self-directed retirement account. So if you have a self-directed IRA or 401k, these strategies can play well in there as well. Finding top companies in the S&P 500 is a great way to trade with sectors made simple in 5 minutes or less. Because everyone wants to invest in the hottest company in the hottest area of the stock market. Of course. But actually figuring out what that company is can be a little tricky. Unless you have sectors made simple. Every single day, we create a list of the 500 S&P 500 companies ranked based on which companies are stronger than others. These relative strength scores are built out of two parts: short-term direction and long-term trend. And it's really cool to know what their different scores are. But again, that's only the hottest company. I also want to see the hottest company in the hottest area of the market, also known as a sector. Is it technology companies that are doing really well right now? Is it healthcare companies? Or is it good old-fashioned oil and energy companies? Knowing all that information can be very, very valuable and is very, very easy to find. Now, if you've seen any of my webinars in the past and you're familiar with this tool, you'll probably realize that what I'm showing here is a very simple way of using the S&P 500 screener. There is a lot more analysis that we can do with these results, but that's a story for another day and a different webinar. And those are our webinars that we've offered over on our Learn site, learn.sectorsmadesimple.com, where you can find all of our past recorded webinars. So for today, 5 minutes or less, we're going to show you how we can find the hottest company in the hottest area of the market in 5 minutes or less, using our S&P 500 screener. This tool compares the 500 S&P 500 companies every single day. So you're getting a picture of which companies are the strongest right now. We rank them based on their short-term strength, their long-term strength, and their total strength as well, which is the combination of their short and long-term strengths. Instead of just giving you the rank, first place, second place, third place, we also show you their percentage, their grade, where that percent is the percent of S&P 500 companies that individual company is outperforming. So if you see 93%, that means that company is beating 93% of the S&P 500 for that category. So that is how we can find the hottest company. But how do we know the hottest sector? Well, funny enough, we can use that same information to find the top sector. If you only looked at something like sector ETFs, there's one big problem. When you're buying XLK, you're not buying equal parts of every technology company. You're buying a lot of the really big companies and not as much of the really small companies. So what we can do with the knowledge of the relative strength of each of these companies is find the average relative strength of companies within a sector. Because after all, 5% gain in the smallest company is the same as 5% gain in the largest company. So I don't care to give more value to the Apples and Nvidias of the world. I want to give more value to the smaller companies, or equal value to the smaller companies. So we can take and find the average relative strength of companies within a sector, which will then give us, well, another percentage that we can then compare to find the hottest sector and then the hottest company in the hottest sector. So here's how we'll do that. Under the S&P 500 screener, there is a section called Sector Strength Averages. This table shows us the average relative strength of companies within a sector. If we sort this table by total strength, that short plus long term, we can find what sector has, on average, the strongest companies. And then put that filter into our screener. Before we get to that, though, let's actually go through and do that step. Or rather, before we continue. So we have the S&P 500 screener as another one of the tools on the dashboard. And sometimes it can take a little bit of time to load because to make this data, we analyze 249,500 charts every day. But who's counting? Below the matrix and the momentum, which is the change over time, we have our sector strength averages. If we sort here by total, we can see which sector on average has the strongest companies. And what we find is 3 companies are all very, very similar: healthcare, technology, and utilities. To keep the example easy right now, we're just going to play it fair and say healthcare has the highest number. That's the sector we'll filter by. So we'll come back up here to the screener itself, and under select a sector, we will choose healthcare. Healthcare. This now gives us the 60 healthcare companies within the S&P 500 for the next step. Because now we have the hottest sector, let's find the hottest company. But before we do, I do want to mention one thing. We are finding the strongest companies relative to the rest of the market, but at the end of the day, relative strength is relative, which means that if the entire stock market is going down, a company can still be gaining relative strength if it's not losing as much as the others. But does that mean it's a good investment right now? Well, in my opinion, no. So, while relative strength is great, I also do care still about its price. So to make sure the stock's price is still strong, we'll add 2 more filters to our screener. We'll add direction, which is what direction is the current price moving, up or down. Of course, we want it to be going up, so we'll filter by the up arrow. And the second is signal. Signal relies on an idea called support and resistance. Basically, we want to see that the company is creating new highs. This can also be seen as the long-term trend of the company. So I want to see things that are creating new highs, which is also called breakouts. So we'll go back to the screener here, and we'll filter by direction, up arrow, signal, breakout. We went from 60 companies to 30. But those of you that are paying attention at home might notice some of these numbers are a lot bigger, while some of them are a lot smaller. So let's find what the hottest company or companies might be. And to do that, all we need to do is sort the table by total strength. Let me show you. Here under the total column, you click, now you got the list. This is an ordered list from the strongest relative strength company to the weakest, in order of their current strength as they stand on as of October 27th, 2025. Here we can see HCA, CRL, HOLX, INCY, the list goes on, are the strongest. How strong? Well, HCA is beating 88.5% of companies for total strength. CRL, 85.4%. HOLX, 80%, and we can continue. Personally, if I just wanted to leave it here, I could pick HCA and call it a day. It's a relative strength leader in the top sector, and we know that its price is currently going up, and it is creating new highs. So that could be the end of it. If we've got a few more minutes than 5, we're cheating. That's not the point of the webinar, but bear with me because we can filter down that list more. We can plug in a list of up to 7 of these companies into what's called a custom matrix. Custom matrices take only a small group of companies and will compare those companies directly. So for example, if I opened up a past matrix that I'd created for a different webinar, what we would see is that we would get the strengths of those different companies only compared to those companies. So from this list, we could see that USB had the highest strength with 10, TGT had the lowest strength with 1. Martha's asking, do I take into consideration the dates of the breakouts? You definitely can. That is another strategy that we can do in 5 minutes or less. So before we talk about that, let's talk about the reasons that we might want to just find the top company. Because this can just be a great way of doing a buy and hold strategy. While investing actively is fun, buying with a new opportunity, selling once the opportunity is over, that's really great. But if you don't have the time or you don't see the need for that, the buy and hold is also a very valid way of investing. Find something you like, buy it until at some point in the future it starts to go down, and you can sell it off from there. So if we're looking for the very passive style of investing, where we just want to find the top company and ride that momentum, this can be a really easy way of finding that information. And while we can't ever guarantee profits, what we can do is use information available to us to increase the chances of success. And that's exactly what we're doing here. We are layering on multiple layers of things that are supposed to increase the chances of success for that company to go up. Just for a little bit more context. According to the National Bureau of Economic Research, NBER, 50% or more of a stock's price change is not because of the company itself, as much as they think that the world revolves around them. The world revolves around a lot more. So 50% or more of a stock's price change is not due to the company, it's due to its sector, and at a smaller level, its industry. Which means by looking to find which sector is the strongest, that's 50% of the battle right there. We have now narrowed down our search because we have the knowledge of what sector, which is half of the price change of a company on average, is the strongest. From there, relative strength will let us find companies that are currently leaders within that sector. Relative strength. And again, relative strength is relative, so tacking on the raw price changes and trends of the company is the final piece of the puzzle so that we can find the hottest company in the hottest sector that's got a short and long-term positive trend for price. Boom. 5 minutes or less. Not the explanation, strategy. So that is a way that we can use the S&P 500 screener. I want to show you another way. Martha, this one's for you. I want to show you how we can find recent resistance breakouts in 5 minutes or less using sectors made simple. And if you have no idea what resistance or breakout is, bear with me. I'll explain it. For this strategy, we'll be using the S&P 500 screener tool. And we'll be using the concept of support and resistance. Support and resistance is a very basic idea in the world of investing, and here's what it focuses on. A company's price is always going to be going up or down, big or small. But it's most likely to change direction at or near a previous high, which is called resistance, or a previous low called support. Why? We're emotional. Sorry. Investors are emotional, and when we see a price go up, stop, and then drop, once the price starts to get close to that previous high, the point where it stopped last time and then fell, no one wants to get stuck holding the bag as the price drops. So what's going to happen is that investors are going to wait and see, does the price create a new high, breakout, or is it going to reverse once again? And the same idea can apply in the opposite direction, where when a previous downtrend ends, it leaves behind a support level. And when the price, if the price falls back to that level again, we are most likely to see that price either reverse or break down below and create a new low. So going back to the S&P 500 screener, this tool can show us relative strength. Which companies are the strongest compared to the others? It can also show us support and resistance changes. What's the most recent thing that's happened to a company? Was it a breakout, which is a price going above a previous high, or resistance, also known as creating a new high? Or a breakdown, price going below a previous low, also called a breakdown. This process is made super simple using the S&P screener. But before we start looking at 500 companies, we're going to try and narrow down our search to make things a lot easier. What we're going to do is only look at companies within the top market sector, top area of the market. And on the S&P 500 screener page, we can do that using our sector strength averages. So under the screener here, if I get rid of these few filters, we scroll down to an error message because it doesn't like me when I'm bouncing around too much. But the beauty is, with a quick refresh, everything is right back as we had it. Sector strength averages will show us which sector on average has the strongest companies. And if we sorted by total count, we would see healthcare, just by a little bit, is the leader. But I feel like we should do something a little different here to keep the examples a little varied. So let's actually use technology. It's 0.03% lower between friends. That's pretty darn close. So we'll go here to the sector screener and sort our companies by sector to only show technology companies. By sorting this table, the sector strength averages, by total strength, what we've done is found the top sector in the market right now and filtered to only show companies within that sector. Now we'll set our resistance filters. We want the price to be going up right now, which is direction. We'll filter to only show things going up, seen with an up arrow. And long-term trend, which is our signal, is going to be that resistance barrier breakout. So if we go back here, we'll put in signal, breakout, direction, up arrow. Cool. 34 companies. But here's where things get a little bit different. What I want to see are which companies have gone on breakouts recently. That's pretty simple. Because just off screen, one of those columns is signal date. What date did that breakout happen? So if we go here and we scroll to the right, you'll see signal date. And we can sort by the oldest signals, but we don't care about that. We want to see the most recent signals. And now what we have is a list of these companies in the strongest sector whose prices are currently going up that have recently broken levels of resistance. To me, and to people that follow support and resistance, that is a great sign. Because whatever reason caused the price to drop back down before, seemingly has changed. And the hope is that the sky's the limit for where the price can go from there. By finding companies on recent breakouts, we can increase the chances that that positive trend will continue. We can see here, today is October 28th. That is a slide that we had 1, 2, 3, 4, 5 companies go on breakouts yesterday. And an additional 1, 2, 3, 4, 5, 6, 7, 8, 9 go on breakouts on Friday, and a couple more on Thursday. You get the idea. So depending on when we're looking at this, there can be a few companies going on breakouts or dozens of companies going on breakouts. But the next step, choose the right company, will always be the same. Well, what we now have is a list of the most recent breakouts that we can see within the top sector. We're missing one part. If there's lots of breakouts, how do we pick the one? Well, one way to answer that is to use the other key part of the sector strength, the S&P 500 screener, relative strength. If all of these companies are going on breakouts right now, and I don't want to have to go and study all their charts, relative strength will give me an idea of which ones are outperforming the others. The S&P screener shows that information as percentages. We can think of them as the grades for each one of those companies, where the higher the grade, the stronger the company compared to the other 499 companies. So let's take a look. We have, if we only looked at breakouts yesterday, Monday, October 27th, or Friday, October 24th, AVGO, 69, okay, 81, 93. I like the looks of that. 77, 93, 93. 85 is not bad. On the other page, we've got 91. So we've got a handful of companies that are all in the high 80s, low 90s% for strongest companies in the S&P 500. Great. How do I pick one? Well, that's where another tool, custom matrices, can come in. Custom matrices lets us take a short list of companies of 7 or less and directly compare them to see which ones are the strongest compared to only those leaders. Typically, these custom matrices can take about 3 to 5 minutes to run. I know I'm cheating. Please bear with me here. This, I would say, is the longest thing that we'll talk about. But to keep things simple for the webinar, I've already gone ahead and created a custom matrix of those companies that we just looked at. These are all companies that went on breakouts in the past, essentially 2 market days. And what we find, AMD is the strongest, Qualcomm, QCOM is the weakest. But again, all of these companies are still the best of the best when it comes to the strongest sector with recent breakouts. So really what we're doing here is splitting hairs. But again, our goal is to show how can we use this tool to come to as simple of a decision as possible in as little time as possible. So while this could be already enough information for you to start making a decision, if you really want to drive things home, you can go create a custom matrix and find the relative strength leader from that short list of leaders as well. Here are a couple reasons why we might want to do this. Buy and hold is great, but for many investors, especially those that are really getting into it, we want to trade more actively. But just because we want to trade more actively and have fun in the stock market, that doesn't mean we need to spend hours every week making decisions of what to buy. While there is a time and a place for charting analysis and all of that, the goal here is to make it simpler. So while we can't ever guarantee profits, we can increase our chances of success by doing more or taking in more information when making that decision. And again, all of the hard work's already done for. Using that filter, we're finding companies in the top sector whose prices are currently going up and have recently broken a level of resistance. And then if we do take it and also we have found which companies are the strongest compared to the rest of the S&P 500 as well. So leading company in the leading sector whose price is currently going up and has recently created a new high. All of that information is piled into the one chart that we can see here. All of it with 3 numbers and 1 sort. Now, these results can be used for more active trading strategies like swing trading, but in my opinion, there's no reason that we can't use this strategy for a more passive buy and hold approach as well. Really, all we're doing is we're just looking for a company who has positive signs of success recently. And finally, one of the great things about this strategy, especially if we want to trade it actively, is that this data updates daily. I can come in here right now, October 28th, and I have information from yesterday's market. If I loaded up the dashboard tomorrow morning, I would have all of the new information from today. As you can see, buy signals are happening almost every day. When the market's doing really well, it's more frequent, which means when we're most interested in investing in the market in short-term periods, we'll have more information to consider, and that information will update every single day. These are not who has had the best returns over the last 6 months. These are relative strengths as they appear today in the market, and tomorrow's might be different. Now, I want to take a look at a slightly different way of using our tools. I want to show you how we can find long-term leaders using sectors made simple in 5 minutes or less. Long-term leaders is something that is very meaningful because it's not just about price. We're not just investing in a company because it's doing well right now. There is a time and a place for that, but if what we're interested in is finding something to invest in for months or most likely years, it's not just about who's having a good month. We want to find a fundamentally strong company as well. If fundamentals is a new term, let me make this even simpler. I want to find companies that are stable, profitable, and growing. Seems difficult, but with a couple of easy steps, we can make that very foolproof. This strategy is going to use Sectors Made Simple's tools, but it is also going to use a style of finding companies, a filter of finding companies called Be a Profit. This was a formula created by my mom, Julie Stav, over 20 years ago, and has stood the test of time as being a great set of characteristics that leading long-term companies have all shared. So what we're going to do is use some of the different parts of Be a Profit, not the whole thing, but just a few of them. We're keeping it easy here. And we're going to use Be a Profit and a publicly available stock screener to find which companies meet those requirements. And then, using that list of companies, we'll plug it into Sectors Made Simple and find which ones are the strongest right now. Here's how we'll do that. We'll be using the stock screener FinViz. It is a free tool that is available to everyone and has some of the most important parts of Be a Profit. While we can't find every single one in Be a Profit, here are the letters that we'll focus on. B for beta. This tells us how volatile is this company compared to the S&P 500. A beta of above 1 means that its price changes on average more than the S&P. Less than 1, it changes, less. What I'm interested in is not the most volatile company. I want one that's more stable, so I want the beta to be less than 2. If I asked my mom which one's the most important, or what's the most important part of Be a Profit, it'd be earnings per share. We want the company to be profitable, and we want that profit to be growing over time. So we want to see their earnings growth quarter over quarter is above 15%. Return on equity. How good are they at turning their current value into more value in the future? We want that number to be 15% or more as well. And then finally, a little bit of technical analysis in here. Price study. I want to see that their price is close to or at its high from the past year. Because again, I'm investing in a long-term company, but I'm following the market day by day. So I want to make sure that its current price is in a good position. This can be done in FinViz in a couple of simple steps. So let me open up FinViz and we can do that together. So on FinViz's website, we can go here to Screener, and we're going to set those filters. Under Fundamental, we'll go here and we'll do EPS growth quarter over quarter, above 15%. Then we will do return on equity, 15%. Then under technical, beta of under 2. And then finally, 52-week high-low, 0 to 10% below the high. That gives us 174 companies. Easy, right? Ugh. I'm not looking at 174 companies, and I'm sure as heck not doing it in 5 minutes or less. We've already used a minute just setting this thing up. So we're going to narrow it down and only consider the S&P 500. If we do that, under index, we can set it to S&P 500, 59. Still too many. So in this case, I'm going to add one final filter for sector. I want to filter to only show companies in the top sector right now. That information can be found on the dashboard, on the S&P 500 screener page. We cleared these values. Down under S&P sector strength averages. Here, we've got 3 sectors that are all very, very, very similar. But because I'm looking long-term, I'm just going to break the tie by saying healthcare. In reality, in my opinion, you can't really go wrong with healthcare, technology, or utilities when they're this close in strength. But just to keep the example easy, we're going to choose healthcare for right now. We're going to go here and set healthcare. 6 companies. I can work with that. If you have a notebook, you might write down these 6 companies. I have a computer, so I took a screenshot of it. Let's now compare those 6 companies and find who the leaders are. We'll use that exact same tool I just showed you, the S&P 500 screener, and use that to find who the strongest companies are. It'll give us a lot of information about their current price trends, short-term direction, and long-term trend. But once we've got a list of companies that we'll consider, we'll put that list in. And we've got those 6 companies. So let's open up the dashboard now and plug in those 6 companies. Because in addition to all of the crazy other filters, you can put in a list of tickers to only show error messages. Once again, the dashboard gets a little angry sometimes if I'm jumping around pages too much, but nothing that can't be fixed with just a simple refresh. So what I'm going to do is put in those 6 companies that we found on Finviz. We've got A, COR, GILD, IDXX, INCY, and finally, JNJ. 6 companies, but not all are made equal. What we'll see here under total count, which is the total strength of each of these companies, the higher the percent, the higher the grade, essentially. So what we see is a couple of these companies have fairly low grades, around 50s. Meanwhile, we have 3 that are up close to 80%. So that information alone is extremely valuable. We didn't have to look at a single stock chart, and we already have a list of which of these companies are the strongest. We've done Be a Profit, we've found the winners, and now we can compare them to find which of those is the strongest right now. If we really need to narrow down this list even more, we can go to Custom Matrices, create a custom matrix using just those 3 companies so we can see which of those 3 is the best out of that set. Some reasons that we might want to do this. Well, Be a Profit is not something that I created or is a new idea. It is something based on decades of research and has been around for decades as well as a set of characteristics that define long-term leadership. This makes it a great consideration for longer-term strategies like a buy and hold. Buy the company because it's fundamentally strong and it's doing pretty well price-wise right now, with the goal that it continues to grow in the future. But while we can use Be a Profit to find long-term leaders, again, we still invest in the stock market day by day. So, by making sure those companies are leaders in the current market, we are increasing our chances of success that those companies' prices are currently going up and they have all of the requirements needed to make a strong company for years and hopefully decades to come. Before we get into this, I want to answer a question from the chat. Jonathan, how can I find a company that has rebounded the support and is changing direction so I can get in early? Romulo, that's a great question, and it's one that I've discussed in a couple of our past webinars that we've done on swing trade setups. So if you check out our recent webinars on swing trade setups, I do cover exactly that, how we can find companies rebounding off of support in that tool. It's important to know these breakouts and breakdowns, it did fall below support in the case of a breakdown, or it went above resistance with a breakout. Swing trade setups is going to give us more information about what companies might go on breakouts in the near future or might go on breakdowns. So what you're looking for is either potential breakdowns, or you're going to be looking at companies that have recent reversals off of their breakdown levels. If you're interested, if you can't find the information in the webinar I've done on that, send me an email. I'm more than happy to walk through that with you as well. It's a super fun topic to cover. So I want to wrap things up by talking a little bit here about our final topic. I want to show you how we can find top dividend companies and compare top dividend companies using sectors made simple. Dividend yielding companies are the bread and butter of many investors' trading strategies, especially long-term traders. Dividends are a very basic idea. When a company makes profits, they have the ability to take some of those profits and distribute them to shareholders as a small thank you. That is a dividend. While some companies will only offer dividends in really good quarters or really good years, like Nvidia, other companies, they've been doing this for a long time. Some of them longer than I've been alive. There are some companies that have decades of consistent dividend payments, but not only that, the amount that those dividends have provided has increased consistently as well. While you might think there's only a few companies in this category, there's more than you think. There's actually two different lists that are very similar. And I want to show you how we can find those lists, what those lists are, and obviously, how we can use Sectors Made Simple to choose the right company. First step, let's find a list. When it comes to companies that we can consider for dividends, there are two main lists that we will consider. The Dividend Kings. These companies are stock companies, or rather are stocks that have 50 years or more of consistent dividend payments that the dollar amount of that dividend payment has increased every single time. The other list is the Dividend Aristocrats. These are S&P 500 companies that have 25 years or more of dividend payments. So the Dividend Kings can belong to any index. The Dividend Aristocrats are only S&P 500 companies. The difference there is that if you are a Dividend King, you need a longer history of dividend payments than if you're a Dividend Aristocrat, because the hope is that the S&P 500 tag is kind of bumping you up in the rankings. These two lists are living lists. There are companies being added and sometimes removed. So, in my opinion, it's very important that we find the current lists. And probably the easiest way to do this, just take the easy way. Google top Dividend Kings or Aristocrats this month. Very basic idea. And actually, let's just go and do that together really quick. I'm going to open up another browser page here. I'm going to focus just on the Dividend Aristocrats for the sake of simplicity for the webinar. Cool. Here we go. NerdWallet, great. The top 7 companies by yield, October 2025. Okay, let's see what we've got, right? AMCR, BEN, KVUE, O, PROW, TGT, HRL. 7 companies. I'm going to take a picture of these 7 companies, and that is the 7 companies that I will use to find which of them is the strongest right now. Within Sectors Made Simple, a big focus of our tools is what's called relative strength. We compare a group of companies against each other to find which ones are outperforming the others. Whose price is doing the best? And while dividends are typically a long-term investment idea, because many of these companies pay dividends every single quarter, 3 months, we're still investing in the stock's price today. I still do care about what the price of the stock is doing. So I want to find which of those 7 companies is performing the best price-wise right now. And we can use our custom matrix tool to quickly compare up to 7 of these companies. It's really convenient that this is 7. I swear that wasn't planned. So we're going to compare those 7 companies we just found on that list. And we're going to have 3 different numbers to look at. We're going to have total count, short term, and long term. Total count is the combination of short and long term strength. That's just going to be the easiest one for us to use. Now, for the sake of time, I'm going to quickly show you under custom matrices that we can go in here and create a new matrix. We can name them Dividend Aristocrats October 2025, and then put in the ticker symbol for those 7 companies. But in the interest of time, I want to quickly just show you that this was a matrix that I've created in the past for a previous webinar where I covered a similar idea in Spanish. For any custom matrix that you've created in the past, you can always update it very quickly to be able to see what the current numbers are. So that can apply to if you're doing dividends or if you're just comparing companies within your portfolio or anything really. So we'll give this 1 or 2 minutes to see who the leader is out of that group. And while we were doing that, we're going to wrap things up by quickly talking about the reasons that we might want to compare and find a dividend leader. Most often, when investors are thinking about dividends, what they're going to do is what's called a DRIP, dividend reinvestment plan. They take the dividend payment and put it back into buying more shares of that company. The beauty of this is that it can benefit an investor in both in bad markets and good markets. During good markets, it's a great way of increasing the number of shares you own. If the price is going up, instead of having to put more money in to buy more shares, you can simply use the dividend payment as extra cash to invest more into that company. Now you own more shares, price of those shares goes up, you're making more money, you now get more dividends, and the cycle continues. But not every day is a good market. Bad markets are not an if, it's a when. So during bad markets, what you can do with these dividends is still reinvest them into more shares. If the price of the stock is going down, but the number of shares that money can buy, the number of shares the dividend payment can buy is going up, what that does is it takes advantage of something called dollar cost average. If you're familiar with that. If not, the basic idea is that if I bought a bunch of shares at $100 and I bought a couple more shares at $90, my average cost is not $100 anymore. So as the dollar cost average goes down, that now makes it easier to turn a profit. Because now I don't need the price to go back above 100 to break even. I need the price to go above $97 or $96. If a dividend king is a dividend king or an aristocrat, that means that they have offered increasing dividend payments. It doesn't matter what their share price is, the dollar amount that they've paid out has gone up every time, which means you get more bang for your buck if the stock's price is going down, which now gives you more shares to profit from when the price goes back up. Very simple idea, but long term, it can have massive benefits. If we are investing in the order of years, good markets and bad markets are guaranteed. So finding a company that has survived the worst the stock market has thrown at it. Let's think the last 25 years, all right? We have got the dot-com bubble, the Great Recession of 2008. We've got the market pullback in 2018, the market pullback in 2022, the COVID. Yeah, they've dealt with a lot of stuff. And they've still continued to provide dividend payments in increasing amounts throughout that period. That, in my opinion, is a very strong sign of a long-term winner. Because they've offered dividends through all of that and are still here to boast about their long-term success and their dividends. So to wrap things up, let's take a look at our custom matrix and see if we can find who the leader is today. And pretty clearly, we can see Target, PGT, is the leader out of these dividend aristocrats. This information is always saved so you can repeat it in the future. But if you're creating it for the first time, it can be done in a matter of a few minutes. So, now we have taken a look at 5 different ways to use sectors made simple. Matrix strategies, finding the top companies in the top sectors, finding top companies on recent breakouts, dividends, and finally, a way of finding long-term leaders through fundamental and technical analysis and be a profit. Do I think you need to use all 5 of these? No. But my hope today is that I wanted to show you that Sectors Made Simple is more than just new strategies that have to recreate how you think about investing. That getting access to more investment tools makes investing more complicated or just takes more time. The best part of an investment tool is not that it makes things more complicated, it's that it makes things simpler. That is why we are Sectors Made Simple, not Sectors Made Silly Complicated. That'd be a terrible name. We can learn how to invest, and we can use Sectors Made Simple in very simple ways to still come to powerful, informed investment decisions. And I hope that today you've learned at least one strategy that you can consider using when it comes to making the most of Sectors Made Simple. If you have any questions for me or want to discuss any of these ideas further, you can always send me an email at support@sectorsmadesimple.com. Before we wrap up, there's one question here. Jonathan, ¿cuánto tiempo podemos tener esa acción a largo plazo o podemos cambiarla cada 3 o 6 meses? I'm going to quickly translate the question in English. How much time should we consider these companies for the long term? Should we change every 3 to 6 months? En general, cuando estamos invirtiendo en una compañía por sus dividendos, estamos preocupando con sus dividendos. Usualmente, vamos a invertir en estas compañías en años y más. Si solamente estamos invirtiendo en 3 o 6 meses, solamente estamos ganando o recibiendo 1 o 2 pagos de sus dividendos. Algunas compañías van a tener dividendos con más frecuencia, como O tiene dividendos mensuales, pero por lo general estamos invirtiendo en el largo plazo de años y más con estas compañías. Pero todavía estamos invirtiendo en la bolsa en este momento y estamos esperando que estas compañías, el precio está subiendo en este momento. Claro que sí. Quiero ver que el valor de mi cuenta está subiendo. Siempre. Por esta razón, en mi opinión, si no necesitamos hacer más trabajo para encontrar una compañía que tiene dividendos buenísimos y un precio que está subiendo en este momento, voy a hacerlo. Pero en mi opinión no es necesario a comprar y vender cada 3 o 6 meses y usualmente estamos invirtiendo en estas compañías durante las bolsas de osos y toros también y el largo plazo. So to quickly repeat in English, the question was, should we be thinking about changing these long-term investments every 3 to 6 months? My answer was, not really. Everything here is my opinion. Dividends are typically paid out every 3 months. Some companies do offer dividends monthly, like O Realty Group, but typically you're looking at dividend payments in the order of 3 months. So 3 to 6 months, you're only getting 1 to 2 dividend payments. But the reason that I wanted to show this strategy to find leading companies for dividends isn't that we want to constantly be moving where our money is. Instead, it's to say that with very little extra work, we can find companies with top dividend yields that are also doing well price-wise right now. We all like to see the value of our accounts go up. Obviously, why we invest. But when it comes to long-term investing, we are going to be in the market. There are good markets and bad markets. So picking a long-term company is really the most valuable and important part. And with just a little bit of extra work in a few minutes, we can also find companies whose prices are performing the best right now. All right, everyone. Thank you all so much for joining us today. It was a blast to get to cover this topic with you, and I hope to see you all back here at Sectors Made Simple very soon. Take care.